Bitcoin is the most secure. And, I think when people ask us, okay, how's this all going to shake out? Is Bitcoin going to usurp the dollar's role as the world's reserve currency? We don't think so. We think the strong are going to get stronger. And what I mentioned earlier, the emerging market currencies are probably where you're going to see a lot of defections. So it's a very big idea, and we think it will be the biggest by far. It will dominate the crypto asset ecosystem. I'm not sure, Ophelia, if you feel as strongly about that. I think our team does. So it will account, we think, for more than half of the crypto asset ecosystem ultimately.
With the financial industry always changing, Cathie Wood has become a well-known voice thanks to her bold predictions and progressive observations. Wood explores the world of cryptocurrencies, especially Bitcoin, in her most recent interview, illuminating the asset's complex dual function as a risk-on and risk-off investment. Thinking back to 2015, when Bitcoin was only trading at $250, Wood describes how ARK Invest had first-hand experience navigating past traditional asset managers' mistrust. However, it was her perceptive observations during critical moments like the Greek crisis that made her realize the potential of Bitcoin as a market hedge. According to Wood's new estimate, if institutional investors were to commit only 5% of their portfolios to Bitcoin, the digital asset could potentially reach a value of over $2.3 million per coin. This is an overwhelming trajectory for the cryptocurrency. Beyond the data, Wood delves into the significance of Bitcoin as an online financial system, highlighting its revolutionary potential to completely change the financial landscape in the future. Come explore Cathie Wood's thoughts on Bitcoin, its changing place in the world financial system, and how the impending halving of the cryptocurrency will affect market dynamics. Watch until the very end of the video as Wood explains the nuances of the Bitcoin halving and how it affects investors globally.
When we took our first exposure to Bitcoin in 2015, it was $250, and traditional asset managers and others in the ETF space were making fun of that decision. And so we paid very close attention to the daily moves. And at the time, Greece was threatening to leave the European Union. And we were worried about, a relapse into the European sovereign debt crisis. Bitcoin might be a risk-off asset as well as a risk-on asset. And that was confirmed last year during the regional bank crisis, when regional banks imploded and Bitcoin went up 40 to 50%. I think that realization that Bitcoin is not only a risk-on asset, a technology, as technology is, but it is a risk-off asset in terms of counterparty risk. There's no counterparty risk here like there is in the banking system. You're hitting on something important when you mention those companies. I know I put them in the report. Their revenue growth is negative. Now, a large part of that is the rest of the world. And now we're getting flash points. Nigerian Naira down 2/3. This is one of the wealthiest countries in Africa, and their population has lost 2/3 of its purchasing power in dollar terms, and probably 2/3 of its wealth, because they tend not to be well diversified. You had Egypt just devalue by 40%. This has all happened since I wrote that paper. The 40% decline. So we're seeing, and I actually think Bitcoin might be a reason for this. Many people now understand they can have a hedge against inflation and, as I said, deflation associated with counterparty risk with some Bitcoin. And I think this could be causing a little bit of a domino effect. I think that this idea that Bitcoin is an insurance policy is important and maybe behind some of the devaluations we're seeing out there. I think there is a global recession underway. You said it. And in the US, the technologies versus the economy, these are booming technologies. When you get technologically enabled innovation, it's highly deflationary. And we've got these 5 platforms. We haven't seen anything like this since the late 1800s, early 1900s. Telephone, electricity, internal combustion engine, deflationary period, right? And those were deflationary technologies. So we're seeing a lot of cross currents in the US. It's very confusing. In the employment report, you get non-farm payroll employment moving up. You get household employment moving down, right? That's interesting. We've lost 1 million jobs, and that household employment is what feeds into the unemployment rate. Even with GDP, if you look at real GDP on a year-over-year basis, it's up more than 3%. But if you look at its identity, gross domestic income, they should equal one another. That one's slightly down on a year-over-year basis. And I think what's happening is there could be some immigration distortions here. We're trying to figure that out. But also innovation, because it's moving so rapidly. There are the measurement systems in place right now were born in the industrial age, and they're trying to catch up. And so we would not be surprised at the end. It's going to feel a little chaotic, and you're going to have conflicting cross currents, I think, while this is going on. But when all is said and done, we think these technologies are now beginning to move the needle, and that real growth, this is what we mean by economic boom, as deflation really happens. And the Fed wants 2% inflation, they're going to get negative inflation. As that happens, there will be very significant unit growth from these new technologies, but there will also be what's known as creative destruction, if you've studied Schumpeter. And a lot of companies think traditional autos, internal combustion engine. If we're right, electric vehicle prices keep going down to the $20,000 to $25,000 range, the traditional auto market is out of business. So that's creative destruction.
For the second segment of our video, in which we will delve deeper into Cathie Wood's remarkable ideas, the inspiration for ARK Invest's creative investing approaches, Cathie explores the ramifications of going outside conventional benchmarks like the S&P 500 and NASDAQ in further detail in this section. She highlights the urgent need to reconsider investment strategies in a world that is changing quickly and where disruptive technologies are changing the rules. Come learn about Cathie's viewpoint on capital misallocation, the value of welcoming volatility in emerging asset classes, and the impact of innovation on the direction of finance. Prepare to learn more about Cathie Wood's unique approach to investing in the face of changing paradigms and technology breakthroughs. Let's dive into the fascinating world of disruptive innovation with Cathie Wood.
When you ask that question, where else would we go? I think what you're alluding to is, if you look at the S&P 500 and NASDAQ, and you look at what's at the top of each of those, the companies there they've hit that level because of past success. And if the world is going to be disrupted and the traditional world order is going to be disintermediated, that's probably not the place to go. However, and we've been fighting this battle for 10 years, including Bitcoin, and we are providing exposures to the new innovation, the way the world is going to work. And what has happened, and it's unfortunate, I think it's the most massive misallocation of capital in history, is after the tech and telecom bust. And what did that mean to the traditional world? It meant, let me get close to my benchmark. Let me get close to the S&P 500. Let me get close to the NASDAQ. In fact, I've seen conversations among portfolio managers in other firms where, the benchmark is their bogey. And shall I be 10 basis points above on this name or 10 below? That's a ridiculous way to invest. It's absolutely ridiculous. You need to take a white sheet of paper and say, what is the world going to look like? Not what has happened and what does the world look like? And especially given how quickly these technologies are moving. And the great thing for ARK in terms of everything that we do, and I know it's true for 21 Shares, but they only do digital assets. But the great thing for us is there is a new investor who understands and accepts this notion that volatility is part of the price you pay for this new asset class. And many we've been referred to just our basic ETFs in innovation as a new asset class as well. That is, we're not a new asset class. These are equities. Bitcoin and digital assets, that's a new asset class. But now we have an investor that understands that volatility is part of what you need to expect. I'm not saying they're comfortable with the downside volatility. They love the upside volatility. Volatility is a very good thing on the upside. So I think this whole space, this new asset class, is helping investors understand what we've been trying to communicate for the last 10 years through Bitcoin, of course, but also through these other innovation platforms. DeFi can sound intimidating to people, defiant and so forth. So you're saying, look, the way to help people understand what this is, as Ophelia just said, this is the internet financial system. How young people are behaving. Even the most seasoned investors out there, they have children or grandchildren, and they're looking at how they spend their time, and they know that more than half of their leisure time or discretionary time is spent online. And so this notion of social status moving online with these immutable digital assets is a thing. They're not doing it, but they see their children and grandchildren doing it. When you think about the internet, how much it has been built out over the past 30 years, that's kind of priming the pump. And now you're just putting this IFS in, this internet financial system. In Bitcoin, you're talking about a global monetary system. You're talking about a technology, and you're talking about store of value. And we think ultimately it will play all three roles of money. So, and a new asset class. Bitcoin is the most secure. And, I think when people ask us, okay, how's this all going to shake out? Is Bitcoin going to usurp the dollar's role as the world's reserve currency? We don't think so. We think the strong are going to get stronger. And what I mentioned earlier, the emerging market currencies are probably where you're going to see a lot of defections. So it's a very big idea, and we think it will be the biggest by far. It will dominate the crypto asset ecosystem. I'm not sure, Ophelia, if you feel as strongly about that. I think our team does. So it will account, we think, for more than half of the crypto asset ecosystem ultimately.
In conclusion, Cathie Wood is essentially emphasizing the importance of looking towards the future rather than relying solely on past success when considering investment opportunities. She talks on how, in a world where disruption and innovation are quickly changing sectors, traditional benchmarks like the S&P 500 and NASDAQ, which are dominated by companies that have had success in the past, do not always reflect the greatest investment possibilities. Wood advises investors to embrace new breakthroughs in technology that are reshaping the future, rather than obsessing about previous success. She criticizes some investors for their inclination to just aim to replicate benchmark performance instead of considering the direction the world is moving and structuring their investments properly. Wood underlines how investors may take advantage of the promise of disruptive technology by investing in new asset classes like digital assets and cryptocurrencies, like Bitcoin. Although she notes that these new asset classes are not without volatility, she also underlines that volatility can be a good thing, especially when it moves in the right direction and allows investors to make sizable gains. She also talks about how younger generations are pushing the adoption of these new financial systems since they are more accustomed to digital technology and spend a large amount of time online. According to Wood, this tendency portends well for the future of banking, as online transactions and social standing heavily depend on immutable digital assets. Specifically, Wood indicates that he is optimistic about Bitcoin's ability to play a big position in the world monetary system and that it may someday serve as a store of value, a medium of exchange, and a technological advancement. Although she doesn't think Bitcoin will totally replace the US dollar as the world's reserve currency, she does think it will control the cryptocurrency market and maybe even cause people to switch from developing market currencies. All things considered, Wood makes a strong argument for embracing innovation and examining alternatives to established benchmarks in order to take advantage of the opportunities given by cutting-edge technology and novel asset classes. According to her, investors may do this to put themselves in a successful position in the constantly shifting financial landscape. Until next time, happy investing.